lessons from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your Watchlist coming into March 5th, 2021, and Jerome Powell has disappointed the stock market. And I got 3 stocks that we're looking at coming into tomorrow, but the market saw another big drop today. We almost gave up year gains on the S&P, but if you come to the NASDAQ, at one point we were even below where we started. So this is a very key level. We got to hear from Jerome, and this is where it gets kind of paradoxical. If you watch what happened in the market, today was a big down day. The bonds even reacted during the speech, a little bit of a follow through, but the market got disappointed even though he didn't really say anything new. So the fact that he didn't even address what the market was expecting or what they thought he would talk about, it has created an interesting effect, but he has given us some comments. So we have a lot to go over, but I got the keys for you. I got the plays. We're going to recap Powell and then what we're looking at tomorrow for the Froggy Friday. Let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch. Let's come to life. And yes, apparently, if you speak Korean and you're from Korean, then yeah, we are the new place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, they put the pressure on Powell today, and they did this in many ways. The first way, that interviewer today, he actually asked a lot of questions. So I wasn't expecting him to go that deep, but he was really pressuring Powell. Even at some points during the speech, Powell kind of said, well, I don't think your audience is even looking for that. But after hours now is what really caught my eye. If you look at all the headlines regarding what happened, everybody is saying that Powell disappointed the market. The market's down because of Powell. So in the past, we're used to seeing the old president tweet at the Fed chair, but now looking at how this played out, it looks like you're just getting a lot of the media and interpretation is saying that Powell fumbled the ball. And even how you see the market trade following everything that happened, it looked like he somewhat didn't really deliver. But now here comes my thesis. I even think it's getting a little bit blown out of proportion considering what we saw today. So I'll go to the chart and show you, but essentially he held the line. So coming to the chart here, you could even see what I'm talking about. The market did respond during the speech, but then after it really made a big move with bonds, it kind of leveled out. And this is going to be a main key with what we're watching for tomorrow, because whatever the bonds move, it's going to give us a better idea of how the market is going to move. And then really, is this situation going to get better or worse, and what that means for stocks, valuations, all of that. So today was an overall bad day, especially pair that with the last few days. And again, it's now brought us below any of the lows that we experienced the first time we got that little rate shock. But now the market is even below the GameStop point. If you guys remember, or at least it clipped right there or at there. And then that's putting us right at the beginning of the year for gains. And you saw the NASDAQ earlier. So there's a lot of contributing factors as to what made today really a bad day. But it's not as if you saw an insane reaction based on Powell. Now, he did make a few comments, and essentially what everything he said boiled down to, and this is why we've been watching, we've been documenting it and trying to see here. We were looking for clues as to what he would say or how the market's going to interpret the future for rates, because that's going to move things around. So he held the line, and this is why I'm saying things are getting a little bit blown out of proportion, because people are shocked because he didn't say anything new, which is essentially that green light for rates to go higher. He pretty much said, hey, nothing is really scaring me. He said that the recent rise in yields was notable and even caught his attention, but he said it wasn't alarming him and that it really wasn't a concern. He's saying they weren't going to step in. Again, some people were saying, was he going to do Operation Twist, which I don't even know where that idea came from, because that would imply even raising short-term rate, because that would even hurt his credibility, which he has intact because he's kept that low. But the whole narrative of what he was saying was pretty much what he was saying last week, and that is what gave the market a slight green light. So as he was talking and discussing that, you started to see yields creep up a little bit. So in tying that into another thing he said, you did see the market respond, and this is where now the market may play a game of chicken. That's why I'm saying the pressure's on Powell. You're seeing it from the media. If the bonds really start to move, he may have to respond, because he said he would be concerned by disorderly market conditions. So he did give parameters to what would make him react, but at that same time, he's implying that what he saw was not disorderly. And then again, it caught his attention, but it wasn't that bad. So the main thing with all of this, and even what we saw today and why the market dropped, the market was expecting expecting Powell to address the rates going up and come out with some new tools or easing, or at least even just be more supportive, but he didn't say anything of that nature. He gave a few things, and now the market pretty much digested it. If he's not going to do anything, he's not coming in with a strong hand, whatever they want to take it, but they're just saying now if their problem isn't going to get fixed, probably going to get worse, and that's what you saw here with bonds. So I have a couple more comments with the Powell thing, but the problem in general here with higher yields and what's going on, and as the market digests this, it is just this giant feedback loop that's created. So we've talked about a lot of different things over many watch lists, literally since the beginning of the month. If you've been on stream, there's various different reasons as to why high yields are bad. Sometimes it's good, sometimes it could be bullish, but overall now it is the fact that it feeds into a lot of things. So I see even articles and people discuss it. Most of them are correct, but the bigger picture is that it's related to almost everything. There's a giant connection between it all, and even quite simply, everyone's talking inflation, inflation, inflation. They're asking Powell about unemployment and then inflation as well, and the plans and what they want to do. But if you're expecting a 4% inflation, why would you want a bond at 1.5% yield? The yields need to go up. People will wait until then. But now, when the base level of government bonds, or even at the longer term funding levels, those yields start to go up, that's going to change the relative value of other asset classes, and then it's going to affect other returns. And then we can start getting into the topic of higher yield costs more for debt, and then what that would do for companies with high growth versus value stocks, which don't get affected. So it goes deeper and deeper and deeper, even the profits for the bonds and all that. That's why it is pretty upsetting to the market. And then, not to mention though, a big part of what we're seeing here is the speed. So I think all of it's important. I want to see how the market digests this, but I do kind of agree with Powell. I'm kind of seeing how people are taking today, and it didn't seem like it was that shocking, considering I feel like you could have seen from a mile away that Powell and even the Fed has communicated so effectively these last coming days. I'm confused why the market is getting this idea, and I think Powell is on the same page of it, because if you really look at it, the 10-year has gone up a lot recently, and it is very high on the year, but it is at 1.5. The historic low is 1.3 on the 10-year. It is barely above the lowest point we ever seen. If you guys have been watching since 2018, even 2019, when all that stuff would occur, that was a very, very big low. So that was a big point to even get to with the bond. So the historical argument does hold some weight that bonds really aren't that high, and that's why I think Powell wouldn't really be reacting too crazy, especially with the market at all-time highs. It was 2 weeks ago, everybody was complaining about a bubble. So I really want to see how the bond market really interprets all this, but I do think it is starting to get a little bit blown out of proportion. However, we will let the market decide, and that will probably give us our answer moving forward. Now, coming into tomorrow, I already gave you guys some of those predictions yesterday. They kind of came true. It really did play out how we expected. So based off of yesterday's prediction, I'm expecting tomorrow to be ugly. However, we know what to watch now. So I'm expecting the bonds to gap up or down in some direction, and then I'm expecting the market is either going to follow it, lag it, or it's going to eventually catch up with it by the end of the day. So if the bond yields gap up tomorrow and then the market doesn't gap down with it, I would expect the market to come and follow the bond yields, or it might take the whole day to play out where the bond yields might come up a little bit from those highs and then the market might come down a little and they'll converge. So the real key tomorrow is watching where bonds open and then seeing if we could spot a lagger or leader, and that will probably give us a clear-cut direction. And then if we get an ugly close turning the gains on the year negative and we close below some of those key levels, that is probably going to be a very bad Friday, which will probably lead into a bad Monday. So we will see, and I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different plays and one that I really like for tomorrow. But the first play that I made today, brought this one up yesterday. I really like it as a rotation winner, and the fact that today opened a little bit weaker at those levels and then it was up 2%. I liked it. I even said it in the morning. I said we're either going to get it at the best time or like really, really, really early, and then especially after how today concluded. I think we might be early with all of these market issues, or we'll see how it plays out. But I grabbed a Boeing and I really like this play. I think it's pretty decent. Again, we haven't hit a Boeing in a while. It's been a minute. It was decently expensive. It had a lot of time, but I like the fact that it had time, and I only got one because in the next month or so, with this much time, if we don't see Boeing pop, I'll be able to get a good average down, and we'll probably hit that one. I hope. We'll see, God willing. But I ended up grabbing a June 21st 450 call at 94 cents. So we're going to see how that plays out. And 2, if you guys are trying to learn how to trade options, get a TD Ameritrade account and paper trade, and you could always follow along with these and you could see kind of what we're doing, how we profit on that. But none of this is a recommendation. Option traders should risk against no financial investments, no financial risk, no purpose, no anything of day. So I really like playing Boeing. It's usually one that could go crazy when it does. So I want you guys to watch along with these. But given what's going on, it is still pretty early, but that was the first play I made today and the only play I made today. But the second play I'm going to be looking at is going to be Tesla and NIO. So I like the NIO long-term put. Those are actually coming back up a little bit, and it took a while, and it is pretty much trailing with Tesla, but I think you are going to get a trading opportunity if Tesla breaks some of those key levels, pretty much $600. So I think it could react a lot. This is going to be very, very social. So I think it really depends on what's going on in the market, but this might be one I might look to trade during any volatility. It might be good to flip here and there. So I really want to watch those. And then I like the NIOs as kind of the longer term, not really worry about. So that is going to be the second play. And then finally, this is my favorite play for tomorrow because it's in the same spot, came down a little bit from exactly where it was last week, and that's McDonald's, but it's the same spot and the same logic as last Friday. And maybe this time it might be it. I didn't play it last Friday. I got the burn a week, so that's why I'm excited here. So depending on what happens with the market, you're getting McDonald's as that leader, it looks like, or lagger on the downside, but if they start to move, I think that could be good. They usually have some cheap options, so we're going to see. But I watched it yesterday. I didn't grab it on Friday. Again, it's going to be a lot riskier of a trade, so I want to watch how that one plays out, but I'm excited to see that. And then finally, as far as everything else, watch the EEM play. Those started to come up. Even some of the old premiums, they started to shoot back up, and the fact that it is up again, it's matching up with some of the premiums here, and this is what you got to pay attention to because I called it out, and we even got clapped a lot on this downturn because we had a lot of growth. Even some of those leaps or anything, they had a lot of gains. You're going to give some of that back even if you have the rotational stuff, but it really has to do with the gains. The VIX has not really been going that crazy, so that's why I'm watching to see if some of the put prices are matching up where they were at similar levels to kind of just get a gauge of how the market is feeling or pricing, even what the market makers are implying. So keep your eye out on those EEMs. I want to see how those are going to play out. I still like the logic with that play, and depending on what happens with TLT, we'll be able to really see if we are on the right track with that. So watch them. Watch TTD. They dropped, I think, like 15-20%, but now this has to do with like Google's tracking measures. Again, there's been a lot of tech news from Google to Apple. It's just slowly been creeping in there and having these effects. So I want to watch for any of that news and see how that plays out, but these are really getting interesting. TTD is a big mover, so on a Friday with a reason, this one could be a really good one to watch. And then I almost forgot, I actually did make another play because we had that old Spotify. I'm getting clapped on that if you guys remember that one. So we sold that naked put. It's down 1,000%. We collected $380. I'm down $3,400. So given the margin requirement, we had money, but now this raises the margin requirement, all that. I'm actually on a maintenance call on this account here. So I ended up selling 50 of those Altria calls to kind of free it up a little bit. I'm going to have till tomorrow. You guys are going to have to watch me maneuver out of this. We talked about it today. There's a couple ways to either control the buying power effect, turn it to a spread, but my logic is I'm expecting some volatility in the market. I said, okay, I could trim some of these, get my buying power back, but the idea is I just don't want to eat this loss because I'm cool with buying Spotify at that price, and given it's a premium sell, the odds are in my favor. So you've seen me get out of these a couple times. I want to just keep pushing it to the wall, which is that expiration date, and then react from there. So you get to see the risks of the trade. Hopefully I've been showing you guys how you get to watch how this plays out, and you're even seeing a real big effect of what happens with margin and all that. So that was the only other plays that we made. So I'm going to be watching those again. Spotify, even TTD, a lot of these companies that move. Watch Google. They held up today. Again, with all of this privacy news and anything that happens, I think they've held up really, really nice. So if they start to go down or if they get hit by news, I think there's going to be a lot of meat on the bone. I'm still down 50% on those leaps. The Facebook ended up green today, which was very, very surprising. They were struggling early on, but then throughout the middle of the day, they really, really popped. So I want to watch them. Again, they had that other news and guidance stuff. Then Tesla, watch that piggy bank level. That's going to be key. And then even on the reverse, come down to some of the stocks that did good today. Watch the companies that held up. I want to watch if Palantir holds up. What caught my eye was a lot of volume. It held up. Kathy Woods got back into it, or she double dip bought it or something. But you can see how it's kind of basing out. So I think it's at a very interesting level. But any of these companies that did good today, pay attention. AT&T, they were doing a lot better. They sold off. Even Altria at one point ended up selling off. So watch them. Gap is one of those companies. I just saw this one. Again, I was going through the Robinhood. Pay attention to anything that really closed green today. You saw how that was helpful last week. So Gap was one of those companies that caught my attention. Smile Direct Club had earnings. I wanted leaps on this one, and I think this one was really anticipated. So I think the options are going to get clapped from the IV tomorrow, but I think it could have a big post-earnings move continuation. So I want to watch them. And then Apple, they're breaking their piggy bank level as well too. Just kind of use them as a leader as well, but tomorrow might be a good day to catch them on some of the Friday premium if you do get volatility. And then finally, TLT is all we need to watch. You're at a key level. I'm expecting most of the move to happen pre-market tomorrow in that first 30 minutes. And then the question is going to be, depending on what happens with bonds, it is really going to put this spot buy on a chase, a run, a lead, lag, or whatever, but the key is going to be bonds. And then as that gets us into next week, let's see how the market reacts. If you could get a big bond move with rotations and not everything gets impacted, it'll make it a lot easier to make moves on Monday. But if it kind of turns into a broader panic or it creates a big divergence, that might give us the green light to start going short or to grab some of the volatility plays. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to not be selfish, baby. Satan is selfish, but the code loves you. I love you. I'm gonna see you in the morning. Let's go.